Time now for the financial week. The Economic Program Oversight Committee, EPOC, gave an outline of Jamaica's debt reality today. The committee made it clear that the country should brace for hard times ahead as the government balances revenue targets with increasing expenditure. Andrew Laidley reports.
Jamaica has been diligent with its debt repayment, but with COVID-19 forcing the government to reallocate resources, finding the money to pay down the interest on debt is becoming more challenging. The government wants to achieve a primary surplus of at least 6% of GDP this year. EPOC co-chair Keith Duncan warns that won't be easy to achieve.
This is not an easy path for any country in the world because everyone would have seen their debt levels increase. Now we now need to get back on track, fiscally responsible, prudent, to get back our debt trajectory moving in the right direction. It would mean having to curtail expenditures in order to achieve that primary surplus target and to have Jamaica move back onto a trajectory of reducing the debt to GDP ratio.
Mr. Duncan admitted that EPOC isn't optimistic about the government hitting its revenue target for the final quarter of this year, but he believes things will improve.
For the last quarter of the year, that the tax revenues look a little aggressive from an EPOC perspective. It looks a little aggressive. However, that does not say that the trajectory of tax revenues recovering won't continue, but it won't necessarily hit the target that they have set for the end of the Q4 of the 2021 fiscal year.
In the meantime, he stressed that the one-off dividend payment from the central bank, coupled with the prospect of herd immunity, should help to shore up Jamaica's financial position.
We were very fortunate that we were able to draw down on a Bank of Jamaica dividend to give us some room through this period. And if we're able to achieve herd immunity in this year, or achieve a high level of vaccination and a return to economic activity. And the economy is projected, according to the Bank of Jamaica, to grow 3% this year. Therefore, we will see tax revenues looking to grow into the new financial year.
Andrew Laidley, TVJ News.
Governor of the Bank of Jamaica, Richard Biles, says the economy is starting to show signs of recovery, even though the outlook remains uncertain with the COVID pandemic. Mr. Biles gave the assurance as he addressed the BOJ quarterly press briefing earlier today.
We believe the contraction in the Jamaican economy is past its worst, and the outlook is for continued, albeit more gradual, improvements in economic activity.
Now he says growth is projected in the range of 4 to 8% in the next fiscal year and could reach the upper limit if tourism recovers quickly. He, however, indicated that plans to vaccinate up to 2 million Jamaicans over the next 12 months could boost the recovery.
They are on the conservative side. If we do manage to achieve that target, it would be great, and it certainly would draw closer economic recovery compared to what we have projected now.
Already 40,000 jobs were restored in the December quarter, and inflation has remained within the target of 4 to 6%. Mr. Biles, however, said the bank is keeping a keen watch on loans which are now under moratorium in the financial sector. The U.S. dollar reached a new historic high in trading today, closing at a cost of $152.05. The Canadian dollar sold for $121.47. The pound is going for $213.52, while the euro ended the day at $186.77. The JC Index lost 912 points today, while the Junior Market Index gained 21 points. Among the winners were Siboney Group, 138 Student Living, Iron Rock Insurance, Jetcon Corporation, and Stationery Office Supplies. On the losing side were Radio Jamaica, GMMB Group 7.25%, Lumber Depot, Victoria Mutual Investments, and Lasco Financial Services. And that's the Financial Week. News from overseas are next.